because the way I view all this is progressing, right? The more eyes to the screen time, the better. The more comfortable you get. So hopefully you guys are feeling a lot more comfortable in the markets. Um, and so just give me 1 second here. I'm waiting for a button to show up. Bring on 1,000. 1,000, the better.
Oh, he's
The
talking
more
about.
comfortable
Oh,
you get. Hold on. He's talking about investment club number 1,000. That might be the case at this point, which would be kind of, in a way, that'd be kind of sad. I think some people will be like, oh, that's kind of sad. But you know what? I chose this direction in the beginning. Like I chose, like this is out of my own desire. Like there was no external force besides maybe making money in the beginning, but like, I mean, beyond that, like once you get into the rhythm of it, it's actually like just my own desire and like chase for excellence, I guess you could say. And plus, this is a fascinating topic too. Like I've also learned that I love like pattern recognition or fractal patterns, and it's actually a really powerful form of like human intelligence when I really think about it. So yeah, no regrets at all. I'm actually hoping like man, we got to make it 1,000 meetings, um, and it's taken me like you know like how do I say it? It's taken me far in terms of like being able to talk and articulate complex things. So again, I definitely view this as like a dojo every week, and it's I don't know, it's made me become the person that um, I would say I'm proud of becoming. I guess you could say kind of cheesy starting off, but anyways, folks, that's just the the little cheesy start. Welcome to another Sunday Investment Club meeting. It's been too long, but not long enough. Just kidding. This is Investment Club meeting number 362, and it's evolved to a pace where we're just kind of like following the rhythm of the markets. And Visa is so roughly about 12 years more to get to 1,000. Oh man. I mean, assuming I'm still living and breathing 12 years later, right? Knock on wood. Yeah, that probably be the case. But oh, I am also in a rush coming back to you guys. I was actually driving my brother and his girlfriend to the airport. They're going to Japan, so I actually just made it back. But I did prepare a little bit this morning, so always ready to speak. And plus, the markets are just so interesting that we just got to dive into every aspect of it. What I have on the screen right here, folks, is Arista Networks, the one that we have been talking about for how many weeks now? I mean, like definitely more than 2 weeks. So more than 2 weeks, that means more than 10 bars. But we also got. I think we were actually talking about over here at the 360 mark, right? And we checked this company fundamentally and everything, and it came out pretty clean. And there was like all the reasons to consider the strong getting stronger, and this one was just definitely a strong one that continues to get stronger. There's just so much value built up into its balance sheet. So again, like I don't necessarily show you guys like exactly what to do. I kind of just say this is the body of knowledge that as an investment club here, that's what we preach and practice. We're going to perfect our understanding of the different bodies of knowledge that exist in the marketplace, gather everyone's perspectives. I mean, there are some forms of analysis that I haven't done and don't want to do, which is like moon pattern analysis. Have you guys ever heard that? Like some folks will invest off based off of the moon patterns and stuff like that. No, I wouldn't go that far. I'd probably just stick with like the that's too philosophical, off this planet kind of thing. I'd stick more with the principle understanding of you know basically fundamental analysis, technical analysis. We practice that every week and we get better and better and better. Bernard says, and sometimes people only think you can make money on Nvidia. In some cases, that in itself is wisdom, Bernard, and we talk about that for years as well, right? Like the fact that what you believe becomes reality, and the fact that some people believe that you can only make money on Nvidia, well, that creates a certain type of trading behavior with Nvidia, right? In that case, you have phenomenal runs and you have over concentration of capital moving into that segment as well. Now, the other things that I've learned along the way is that it's actually not what do you call it? The majority of market participants is actually not the ordinary person. At least I've come to highly believe that. We should actually look up some stats and see exactly what it is. But let me ask you guys this: like when you're looking at a stock chart like this, right? Do you actually think the majority of people behind the scenes is like ordinary? Well, they are at the end of the day, everyone's an ordinary person, but do you think it's like mostly institutions or mostly like individual, right? Because like when you really think about it, at the end of the day, how likely is an individual likely to stick to this for like the long run? They're gonna get tired eventually, right? Because they're not, it's just more like, hey, I'm working, I got excess discretionary funds, I'm just gonna invest in the stock market. Versus like the professional, they live and breathe off of the screen right here, right? They want to know where prices are at all the time. Um, so, I think the journey for me along the way was I evolved more away from just what mainstream is talking about, right? Mainstream pays attention when they want to pay attention, when, drama is high or story sensationalization is high or whatever. But institutions, they kind of have to 9 to 5, like look at it every week, right? They're looking at it 24/7. So I think once you pick up that, you get a lot more perspective on things, right? So speaking of that, what we're looking at is Nvidia right here, right? And Bernard says only, Nvidia, people thinking Nvidia can only keep going up. In some cases, I'm not going to express any bias, like, yeah, that's true, that's false. I'm just going to say, hey, so be it. That is the fact of the consensus fact. That is, factually speaking, it is it is in people's minds, and so be it. If it's in their minds, they will make it happen and it might become true. So what do we know about this? We know that, there's a lot of volume right here and a lot of volume right here. So this price area right here, this chunk right here, right, has been under, a good amount of like potential accumulation, right? It's a lot of selling action as well. It's not just green volume, it's also red volume and stuff. But you could tell that, there's definitely a player or a group of players focusing in this price range right here. And, we got, sort of a resistance, again, automatic trend line right here. I didn't draw that trend line, but multiple resistance point, and then we broke out right there. And then now it's starting to head that direction. So this is looking like, with the rest of the markets going to all-time highs, continue to go to all-time highs. Um, there's a good chance that Nvidia is going to be continue to be a play next week. Bernard says, no, I mean, there are people that think Nvidia is the only company you can make a lot of money in. Not true. Just look at the 5-year gain in other companies. Yeah. I mean, at the end of the day, I think you can make money in every aspect of this market because essentially, even a penny stock, right? Even though it sounds stupid, but realistically, if we talk objectively, if a stock price goes up, that means someone else gained, and if it goes down, someone else lost money. If Morris comes back, I don't know if Morris is going to attend today, but I'd love to double click on what we talked about last week, which is basically like understanding the dynamic of like money coming in, money coming out. Even now, like this week, based off what we talked about last week, he didn't quite understand like why is there overhead supply, right? I still my viewpoint still remains the same this week. Like I thought about it, but nothing really changed. If anyone recalls in here, sorry. Drinking that first sip of coffee right there because I just got back from the airport. Anyways, so jumping into the markets this week, right? What do we have? If you guys are reading my weekly market monitors, right, it looks something like this right here. I've been calling green light for several weeks now. I think like 2, 3 weeks, probably 3 weeks. It's been pretty good, all right? And then I also list out some of the stocks that I'm paying attention to each week. Um, it's like a religious practice at this point after doing it like 60 times. But if we were to analyze the markets and see where we're at today, I think, again, give the market monitor the weekly report some credit because it's actually pretty spot on, right? I definitely called the yellow light in this area, and in the last 2 weeks, I definitely called a green light. And we're definitely in that green light. Actually, you're looking at the S&P 500 right now. It's moving into all-time highs. So what does that mean for the rest of the marketplace? That basically means that stocks are bullish, right? Things are moving into all-time highs, which is an expression, a suggestive expression from institutions that they're willing to basically, well, bid prices higher. So capital is flowing into the marketplace, and we want to dissect and understand, is it flowing into every other? Oh, you know what? I forgot to press a button. Jeez, that's hilarious. Okay, that's fine. I actually forgot to press one button, but that's okay. I'll press it right now. So a little bit late, but that's okay. That's funny. I forgot to press a button. But anyways, welcome guys. We're getting started here. I thought things were on, but it's okay. So as I was saying, S&P 500 moving into all-time highs here, and we want to dissect further and just understand the lay of the land, right? So we could always do the traditional top-down analysis, right? Very structural form analysis, but I don't mind. I'd rather jump into direct stocks, but maybe a little bit of both. I'll just mix and match it, confuse you guys a little bit, introduce some unstructured, informal presentation style so that you guys really use your brain cells. I joke. Sorry, there's a motorcycle that went by my neighborhood, kind of loud. Anyways, S&P 500 right here, nothing much to comment. I mean, it's just moving into all-time highs. We could leverage some of these automated drawings right here. Like, I mean, at this point, I rely a lot on the automation. The automation is like, hey, let the computer, let the machine draw the lines for me, and then figure out, where things want to go next, right? So you can see right here, this is a nice trend line that the S&P 500 continues to hold. As long as it continues to hold that, then yeah, I mean, things are looking pretty good from a momentum perspective. Swinging over to the NASDAQ over here, right? We're just doing a quick calibration at the top level. Then we start zooming into specific stocks, and I got a list of them that I'm looking at. I mean, again, that's actually what I want to see every week. Like, I don't know if you guys recall, but during periods of like, let's say this period right here, where stock markets or S&P 500 or indices, when they're in decline, I don't know if you noticed, but there's like significantly less like stocks that I would want to play every week. So one analysis is like how many stocks is K looking at for the week? If I'm looking at a lot of stocks, then the environment's really good, right? Because when the environment's really good, the realization, the learnings is that there's actually so many stocks that you could play in a really good environment. But then when the environment dries up, then there aren't that many. So during periods like these, there's like nothing, right? But periods like right now, when markets are pushing the new highs, there's actually quite a bit. So when my list is long, that means it's telling me that if I'm feeling bullish on this with a big list, it's telling me that other institutions are piling in and pushing prices up. So, how high can we go? Who knows? I mean, S&P or Nasdaq over here, year from the last 365, the Nasdaq is up about 33%, right? And it looks like, we're trying to go higher here, right? So again, automated trend line right there. I didn't draw that trend line. Let the machine draw the trend line. Technically, we are above that line, so it continues to hit my points and progress to new highs. So it's actually looking pretty good, I would say. So that's Nasdaq right there. Let's swing over to Dow Jones, right? You won't believe this one right here. Look at this one. Mm. What do you guys see? Look at that. I mean, that green light, when I call that green light, right? Again, this is what I'm proud of because I pride myself on being able to forecast, right? So I get more satisfaction when I'm correct on what I think is going to happen, because that's showing that I'm improving. And then when I'm wrong, I'm wondering like, okay, what did I do wrong? What was the reason? And if you go through that week after week or day after day, I think by the end of the year you learn a lot about the markets and you get a feel of it. So I think you guys are seeing what I'm doing here, right? I'm just spending the honest time to build up the experiential data set in my proprietary mind, right? That's called experience right there. You just got to build the experience. So beautiful setup right here. All right, again, automated trend line, top resistance line right here. It found support on that top resistance line for quite some time, and now it's just moving to, well, what can I say? It's moving into ATH, all-time highs. So Dow Jones, very good. Bernard says it's so fascinating. It's like saying there are no problems, inflation wars, not a worry with record every index. Yeah, inflation. We talk about government debt already, right? I think I've settled this years ago when I did a lot of macro analysis years ago. And I mean, I still do macro analysis to this day. I don't know if you guys read it in the weekly report. I still actually do macro analysis, but structurally speaking, I've been saying it for years. Like they have no choice but to print money. Like foundationally speaking, the governments, I mean, we go into some of the reports, like the governments, they they have so much debt and there's not enough budget, and so they're always running into a budget deficit every year. So it's really they got no choice, and so they have to service these deficits, and when they do, they print money via a method called issuing IOUs, which is issuing more bonds. We settled this already, right? And so the fact that they have to service that, and there's no, it's a complex social system, right? They have to service that quietly or in a way that that just works. It causes inflation as an output, as an outcome, right? So their actions of just servicing their own debt creates inflation, and wars is just another reason to expand on spending, right? Expand on spending, which means like where are you gonna get the money? You issue more IOUs to spend on spending. Ouch, double whammy. So in a way, it actually does make sense if we kind of view it from that logic, Bernard. Like it's like hey, like look at Lockheed Martin right here. All right, the stock is just performing as we said it would. We've been saying the stock would perform like all the way back here at like the 560, 570 area. Right, it continues to perform. Now it's at the 600 area. So yeah, I definitely think there's more inflation coming. I definitely think a cup of coffee is definitely. I mean, yesterday I paid 6.45 for a cup of coffee. It was a Vietnamese cup of coffee. It's a weekend. I like to treat myself. $6.45 for a cup of coffee. Talk about once upon a time. I mean, I could from raw ingredients, I could replicate that same cup of coffee for way less. But it's just sometimes you just need that external social outing experience to keep yourself sane. So you pay the $6.45. But yeah, inflation's coming. It's the same drums I've been beating for years. It's just people don't want to hear it. People don't want to hear the truth. People don't want to hear the pain. But you know what? Like to grow, it requires you to engage in pain, just as we learn at the gym, right? Bernard says it is my imagination, or are prices actually coming down like Chipotle, etc. Um, is Chipotle coming down? What's the price of Chipotle? I haven't been there for a while, but I could definitely tell you that their ingredients are getting worse, as far as I know. There's a lot of like, on one side, we're looking at Chipotle over here. On one side, again, the nature of economics, right? Like, if prices remain the same, but like, just look at the surroundings, right? If other producers are increasing price, that means they're trying to maintain the quality. But if other producers are keeping price constant, like Costco hot dogs, right, then they're probably bringing the quality of beef down. So it's probably like not grass-fed beef, it's like, grain-fed beef, and it's the cows that, not the strongest looking cows, right? That might be the case. Dora says, looks like great Christmas gift is a pound of high-end coffee for the home. Yeah, I mean, yeah, I'd love that too. V says if the prices are coming down, they probably have reduced the quantity, like orange juice. Yeah, like something has to give in that equation, right? Like at the end of the day, just think of it as an equation, which is like, okay, if the variable price goes down, something has to happen to the quantity or the quality, right? Yeah, exactly. Shrinkflation. That's what it's called. So, I mean, once upon a time, right? They say burgers were, or like once upon a time, restaurants or fast food joints would be frying French fries in actual beef, fat. But now it's like industrial seed oil, right? Which is, but then we're trying to introduce that experience, that food experience, to everyone on the planet. Well, I think that's just the nature of it, right? And that trend, as far as I've been teaching here for over the years, it hasn't changed at all. So things only get harder, folks. So I've always been that's why this investment club has been really legendary for me, because it taught me that by default you just have to work hard, because there's this invisible economic hand, this invisible force, or invisible hand that's doing its thing, that's working against us, which is, on top of like actual taxation that we see, there's also the invisible taxes, which is inflation. V says, I'm a fan of it, and that we eat way too much anyway. Most people have become supersized. I definitely think so. But that's just the reality that we live in, right? Um, I definitely wish I paid attention to the food supply a lot sooner, like I did with stocks. But that kind of just came later in life at this point, to realize like the food supply isn't all that great. But then again, when you realize the players behind the scenes, you realize like, oh, it's companies like Cargill and stuff like that, which is one of the top companies on the planet. Anyways, let's continue on the stocks here. So I showed you the Dow Jones Industrial Average. We could look around. We could look at the Russell 2000 as well. Again, it's all about getting a feeler of like what's going on in the marketplace, right? So Russell 2000 over here is still definitely consolidating, right? Attempted to go higher right here, gap down huge and then recovered, right? Just kind of chop chop chop. But then now it's still elevated, and it's still holding key moving averages. I know I have a lot of like lines on there, but I think at this point you guys have an understanding of like what I'm looking at. So this still looks good to me, right? It actually looks like a build up. And that's essentially what we want to see. Zooming out here, this is what the Russell 2000 looks like, and we talked about this before, right? We have this nice rounding bottom right there. So when you see roundedness like that, it's essentially like, again, like we need to think about markets as really the definition of what a market is, a supply and demand of like, you know, demand supply economics essentially. And so when prices round like that and it starts rounding to the upside, it's showing that the bulls or the buyers or the demand is starting to win over the supply that's selling off. So the fact that prices want to go higher, that's a really good sign, right? And most of the time that is the signal right there. So that's Russell 2000, still putting in that work, I see. Looking across the universe of stocks over here, right? We don't just pay attention to USA. We want to see what's going on in Japan. So Japan over here is definitely making a recovery. I mean, it did sell off quite a bit. These were some sharp sell-offs that were pretty scary. But it's back above the 200-day moving average, so they pretty much had a market correction right there, right? Japanese market-wise, they had like a 28% correction in a period of 30 days. About 30 days, they had a 30%, that's like a 1% a day, 30% correction, right? So they're recovering, which is good to see. Again, it matters when it matters, but right now we're seeing recovery, so it's telling a different story. Uh, Give me one second. Let me just clear my throat real quick. Looking over at Stocks 50 over here, right? European markets also recovering pretty well. I would argue that sort of like reverse head and shoulders right here, right? You see prices setting in a higher low right there and another higher low. So that's a lot of recovery right there, right? So that's again what I'm looking for is like development, right? There are some things that I don't like, I'll tell you. So the DAX here, right? Wow, look at this one, right? We also had a selling period right here, right? Strong selling period right there. That was concerning. Bounce off the 200-day moving average right there, and then now already making its way to new highs. Well, attempting to get back to new highs. Sorry, I think my cat, or there was a cat that was walking around my legs. But yeah, so that's DAX right there. And then the thing that I don't like about the marketplace right now is probably the elevated volatility that we have. So if I open up VIX right here, this is a concerning point, but not really. I mean, it's another indicator out there, right? And let me see. There we go. It's another indicator out there, but ideally, for a real legit green environment, it needs to be below 15, right? So that is one of the in terms of like my weekly report, right? Like I definitely see the green light, but the VIX over 20, as I mentioned right here, is concerning. So if you guys don't know how to read the weekly report, this is like the half-page snapshot that I do every week, the commentary on what stocks I think is going to go up, what stocks I think are going to go down, like basically what plays are good for the week, in my opinion. But every week, the date, I give a judgment call, whether I think it's green light or not. It's not a full-on green light, but it is a green light right now. But I put risk management because VIX is kind of high. But when VIX goes down and I see the environment's really good, then I'll put a full green light. So that means I'm really bullish. Then I'll also leverage the $8,000 indicators, which I totally forgot to open. Oh my gosh. But the indicator on the indices and indicator on the Magnificent Sevens, right? So they also have a green light, but it's slowed down a bit. And then market sentiment optimistic, market breadth overbought. It's just kind of knowing like what condition are we in, and then just the commentary right here, right? That I issue that every week. So yeah, something to take note right there. Volatility is it's elevated. It's never going to be perfect, but if prices are moving, then we want to engage in price capture. I feel. So that's it for around the world, folks. We could look at commodities and everything, but let's look at some of the stocks out there, right? So now that we know the Nasdaq and S&P 500 and stuff, they're going to all-time highs. We're basically trading at all-time highs. So some of the underlying stocks out there, something like a Meta, right? So this one I've been pounding for a while. Basically, I've been pounding at the green line right here, saying like it's going to go all-time highs, all-time highs, all-time highs. Look at where it is right now, right? We are definitely far away from that green line, which is basically 540. Now we're at 589, and I actually expect this to go higher. Something to take note of is earnings are coming up, right? And the earnings on this one is coming up at the end of the month. And By the way, speaking of end of the month, I am hosting a party. The announcement for the party is up. So if you folks want to join, I am actively promoting it now. So my goal is to get 100, at least 100 people coming out. I actually just started marketing yesterday or the other day. The other day, that's right. So feel free to join, folks. So far we got 27, but I need to get to like 200. So I got goals to hit. Anyways, come out to the party. It's gonna be in Milpitas, and it's a really gigantic room, and I gotta figure out, what foods to bring for you guys. So just the usual networking party. Uh, Bernard says, is there a certain increase in the annual market that is viewed as acceptable, i.e., not too high? Like the current 20% plus increase seems high overall. Yeah, I mean, remember, we want to catch ourselves when we say it seems high, right? Those words like, I feel like it's too high, it seems too high, nah, I don't want to do that because of nah, right? Like, we need to understand, like, is that your opinion or the market's opinion? So obviously, right, I could objectively tell you if markets are going higher, then big money is pushing it higher, and I could tell you objectively that they don't think it's too high, right? They're playing off of some other parameter. But yes, I mean if you're looking at it year to date wise, we are up 32.83%, and we could pull up the seasonality to show you that October historically is a good month. So that's why we're moving into this month. This is good seasonality right now, right? We're already past September. September was the month to be concerned about. So if I pull up the seasonality S&P 500 over here, oh, let's do that one right there. You can see once it loads up right here, it's capturing all that data. Uh, there, give me 1 second. Once it loads up, here we go. And I'm going to zoom out a little bit. So we know that the seasonality, right, in all years, the prior 30 years, we know August and September are tough periods. And then October, November, things are really bullish. So is it scary? I mean, subjectively, right? It's scary, but I've I've learned to like not care so much about the like what I think anymore. It's like really like it's not about what I think. It's what the markets are doing. And if the markets are screaming higher, then so be it. I'm not going to complain that yes, it's up 20 uh, 22 was that? Hold on, trying to get my mouse there. 22% year to date, right? But we're moving into good seasonality. So the rest of this month, it could just be like a green light. So far, I'm still seeing a good environment. So good environment means, well, I wanna keep going. This is really good right now. So we're gonna look at some stocks and see how they perform, right? Again, this is just a baseline, right? It's just base. It's like this is just a 4 year degree that you go to college for, right? That doesn't necessarily mean what it means is like you have a 4 year degree. Now you go and you build on top of that 4 year degree base knowledge. You get it? So this is just a base knowledge of seasonality, a baseline model, right? Of like what happens the last 30 years. And so it's up to us to build on top of like, okay, we know the markets have a tendency to do this, but it's doing this. So it's up to you to build the judgment call every week to figure out like, okay, what's actually going on. So that's how I think about it. Doris says, given banks are reporting, I used FAS this past week and put in a smaller position on UDAO. I switched from SPY to IWF. So let's look at some of the stuff that Doris is talking about. So she says that, so it's interesting because real quick before I show you, we could look at XLF, the ETF that represents financials. But put in, let's see, I use FAS this week, giving banks a reporting. So the interesting thing, if you dissect the Dow Jones, right, the ETF right here, DIA, Dow Jones Industrial Average, you see that the majority of it, 18%, is in finance right here. You see that, right? So we could go in here and like Goldman Sachs is like, well, this one, health services is the biggest position, but collectively there's more financial. Well, I don't see it here, but should be more finance companies. So let's look at XLF, right? If we want to get a segmented view, because it helps to understand the sectors that your stocks fall into, right? So let's say if Doris wants to play bank stocks, she's feeling hot on bank stocks or financial stocks or just bank stocks, you then have to think about, okay, what sector does a bank stock fall into? It falls into finance, right? And you can actually further dissect it down to the industry too, like regional banks or national banks. So this XLF right here is like everything finance, and we can see that this one's also moving into all-time highs. So yes, Doris's hunch in terms of like performance, I definitely see performance here, and I would chase performance because there's money there. Now other ways we could slice and dice it is we could go to the screener and we can filter down to the sector, which is financials, and then from there it'll give us an industry view, right, of like all the things in financials. Now, maybe Doris just wants to focus on certain types of banks, like regional banks or diversified. I think the diversified ones are a lot bigger. Let me see, asset management. So it basically shows you everything in the financial services industry. So no matter what they do, eventually it all gets piped into some category in here, right? So let's do diversify. I think those are the bigger ones, if I recall. It's a great learning lesson as well. Yep, these are yep. So banks diversified, meaning they're like the biggest banks on the planet, and what they do is diversified. They have everything from like consumer lending to corporate lending, et cetera, et cetera. So these are the biggest banks in the game, and you can just scan individually each one of them, and you can see a lot of them are actually on the move up. A lot of them are just starting its move up, right? HSBC, Citi, Mitsubishi UFJ Financial Group ADR, UBS, right? Lots of performance happening in the financial sector. So I mean, as you see, like when things are good all around, things are just gonna it's just gonna keep going up. And again, we have to catch ourselves, right? Like Bernard, like we gotta catch ourselves saying like, isn't it a little too high? Is it a little too frothy? It's always gonna be that case. But when it starts turning, like I think I'm pretty sure I would know when it starts turning. But right now, I don't see it turning. I see it going up. So I'm not going to. This is what I did in the past that I hated myself for, which is like on its way up, it's like, okay, it's up now. I'm gonna be a contrarian. But what I've learned is like the mantra is monkey see, monkey do, right? I don't want to be a contrarian. I want to be what's the opposite of contrarian? Now I'm thinking, I want to be in rhythm with the marketplace. So even though I might have a personality somewhere in my brain that's like or my mental where it's like, hey, you want to be a contrarian so bad, don't you? Right? But I'm like, nope. I'm gonna slap my hand, say, nope. I'm gonna stick with the rhythm of the markets. Monkey see, monkey do. Is what I rather focus on now. FAS moving up, so Direction Financials. Oh, Doris playing some leverage over here. Doris is getting pretty sophisticated. So yes, yeah, this one's definitely moving up. I mean, this one, yeah, I'm all for this one, Doris. Like I participate with you. You know, well, I'll come to the poker table. I'd be like, hey, I'm betting on the same thing Doris is betting on. So I'm in agreement, right? Because again, it's like I see markets are moving up, and I want to go with that. And then up Dow sounds like leverage Dow Jones. Yeah, this is great too. These are yeah, Doris is like on a trading. Sounds like Doris is on a trading win over here, trading spree. This is good too. Again, I mean, hold on. This is not investment advice. When I say it's good, it's momentarily, right? Because I might not be there for when it starts turning, and I can't say it's bad. So right now, momentarily, yeah, this is looking good right here. Things are moving. So these trades are happening. Um, and yeah, things are looking real good, I gotta say. Let's continue to look at the fangs. How about that? We saw the indices. We're gonna go through all the stocks over here. Did you guys see Uber? Right? I don't think did Uber have earnings? I don't think they had earnings, if I recall. I was a little busy this week with some stuff. Yeah, they actually didn't have earnings. I actually didn't read. I didn't follow up on the news over here. Let's see. Tesla stock saying Uber rose after robotaxi event. Okay, that's why. So look at that. What do we see right there? What is this? What is this, folks? We see all-time highs, right? Is it too high? Don't say that. Don't say is it too high. Last 365 has gone up 85%. Uber is looking fantastic, right? And this thing could run for a little bit longer. It could run for within the next 30 days here, right? So I have position. I have calls on Uber, by the way. I'm chasing after some of these, right? So yep, Uber looks good to me. When I think of Uber, let's look at the flip side. Let's see how Lyft is doing. Let's see, when news like this hit, can other companies in the same category potentially get impact too? So let me ask you this. All right, pop quiz. Do you buy? Should we buy as an investment group or committee? We will decide on how to allocate funds for the Silicon Valley retirement retirees. Uh, Given that this taxi news is pretty hot in the industry at large, and we've come down to two conclusions between either Lyft or Uber, which one do we buy? Pop quiz. Should we buy Lyft or Uber, and why? If you want to say why. V says Uber. Why? Why do we want to buy Uber? And why do we want to buy? And why don't we want to buy Lyft? Let's ask why, right? Let's look at it too. Dora says I'm in Uber and the institutions are buying. Exactly. But why? Why else? Uber, no more bag holders. Exactly. Exactly. Right? Uh, Uber institutions are buying it, and there are no prior bag holders. But Lyft, right? Institutions are. I mean, yeah, one could say there is accumulation happening here, but there is, there are bag holders like all the way up until there, right? Which again, Morris is not on, but he didn't understand this concept. But it's still pretty intuitive to me. It's just like I guess like the way I explained it, it didn't work, right? Because again, like okay, we let's revisit this this overhead supply theory, right? So when a company goes IPO, again, like we got to go to the root of it, which is like how are shares born out of thin air? Shares are created when Bernard goes to the Secretary of State and says, "Oh, I'm Bernard, and I'd like to start Bernard XYZ Corporation, and I like to that corporation. I like it to have 10 million shares, right? So that's Bernard." And so Bernard created 10 million shares out of nowhere. Now he's a corporation and now he has to go fundraise. So he has 10 million shares. He goes out there and he talks to a bunch of VCs, right, to get that initial capital or family and friends to get that initial capital. And he'll go to his cousin V, right? And he'll say, "Hey V, you're my long-term cousin. You're the best. I trust you, and I'd like to give you, founding shares of 5%. And it's going to cost you, right? 5% is going to cost you I don't know, like $1 million. And V says, you know what, Bernard? You're my best cousin ever. All right, let's do it. Right? So Bernard created the share. Well, through the support of the Secretary of State, he created the shares via his corporation, and V was that first buyer. Right? So that's private over here. Bernard and V, that's the first transaction. Right? We had a buy-selling transaction. So the moment that happens, right? Because Bernard is the origins right here. V is the buyer, right? He put 1 million in, and now Bernard, basically, I guess you say, fundraise 1 million. I guess you should plus 1 million here. But now a transaction, a candlestick just created essentially, right? That candlestick was like 0 to whatever 1 million valuation is, right? And so Bernard will keep going around. He'll go to Doris, he'll go to Liz, and he'll go to everyone and start fundraising. And then there'll be more candlesticks in the private markets. And it'll get to a point where Bernard performs. He's hiring more people. He's doing sales and marketing. He's closing deals. He's bringing on more investors. He's engineering his product, R&D. He's building up the balance sheet. And it's getting to a point where, wow, he qualifies to be a NASDAQ publicly traded company. So then, Bernard says, okay, I need to go to Goldman Sachs or Morgan Stanley. We need to do this rodeo show. We need to create perspectives so that Kay can analyze us, right? He's waiting to get his hands on that S1, and then he goes IPO, right? Bernard goes IPO. Finally, we go IPO, and again, Bernard is the original origins of those 10 million shares. But by the time we get close to IPO, there's a lot of dilution, and so that 10 million shares has now become like, I don't know, let's just say 100 million shares, right? By IPO, we have 100 million shares. So by IPO, you have players like, getting out right here, right? Because, downward price pressure is basically like people just want to sell out and they're willing to sell at a lower price, sell at a lower price, sell at a lower price, right? But Bernard, he is the original facilitator of this game. Does that kind of make sense? Dora says, translate bag, please. BAG. Like bag holders. No more bag holders. Yeah. So Doris, if you were listening to the prior conversations, we basically said that the reason why a company like Lyft right here will have a hard time going up is because this box that I'm drawing right here is showcasing overhead supply. In other words, they are bag holders. In other words, people holding onto shares that are at a loss, right? Because let's say at IPO here, right? Let's say we IPO right here, right? You have a buyer and a seller. So the buyer will buy in at IPO and prices go down. So that buyer is now a bag holder. B is for bag holder, not buyer anymore, right? Yeah, I'm a buyer, but also a bag holder. So the fact that it's gone down like this and stayed down, and as it makes its way up, there are bag holders all the way over here that are still waiting to either, they're like, I'm going to be stubborn. I'm not going to sell my shares, right? They're still bag holding. And so that causes basically pressure. It is only when the stock basically goes to all-time highs here, where in theory, right, it is a theory, there is no more bag holder because everyone it's already neutralized out, meaning every loser has already become a solidified loser by taking their losses. And now, in theory, anyone that's still holding onto the stock at all-time highs, everyone's in the green, right? At this point, everyone's in the green. So technically, there is no more bag holder once it goes into all-time highs. And if there's no more bag holders, then the stock has the ability to really run. But the vast majority of us are stubborn, right? We're stubborn because some of us like to be cheap. And so if you're cheap, right, you won't get opportunities. That's why I put a paywall for this investment club, because maybe eventually for the folks who are listening for free, maybe prices might rise, and I'm going to lock it. Right, I'm gonna elevate just with this economy to show that everyone needs to be putting in their work. Because if I put in my work, other folks have to put in the work. So just whoever registers today becomes a member, they're kind of locked in, right? And there's benefits to that. But when prices rise, it's just next stair step, next stair step. So that's just like this over here, right? So again, going back to it, Lyft has a lot of overhead supply. So the committee, the Silicon Valley Investment Club committee, has decided to consider a position in Uber, right? And as we consider a position, we need to analyze like what's our stop. Maybe our stop is the prior high right here, right? So our risk management principle says we're going to enter here, and as long as it remains above this price, we will remain in position. But if it doesn't, we will get out and we will identify the next viable investment theme or thesis. So yeah, that's pretty much it. So yeah, so that is the reason why I would pick this one over this one, right? But you could still play both. Don't get me wrong. Like there's still money to be made here too. But just know that I mean, if you're a rocket, you want headwind or tailwind, right? Like which rocket's gonna you want the horse with tailwind or headwind? All right, I guess if you're short, you want the horse with headwind. Doris says, "I like that. Thank you." Hey, no problem, Doris. So yeah, that's really and we got tailwinds from the market right now, right? So yeah, I mean, sure, one could say this looks good too. I think it looks good too, but I'd be ready to sell on any moves versus like something like this when it's all-time highs. I'd probably hold longer, right? Because now it's at this phase right here when it goes into all-time highs, it's in a mode of it's doing what the market should be doing as an apparatus. The apparatus of being a price discovery mechanism. So yeah, this is looking pretty good right here. Now it could sell down. You could be patient on it. It could come down. That could be a scenario too, right? To retest the prior breakout support line right here at the $80 mark. But Uber is a position that I like. Nvidia. So with the rest of the marketplace going up, right? Facebook all-time highs, Netflix kind of like choppy at all-time highs, kind of slow. Nvidia, I mean, it's just about to be at all-time highs again, right? In other words, it's about to be in that state of no prior bag holder. So that could be a sign for further price action. So I know it's getting kind of high, but it is what it is. If the markets want to take it higher, then I'm going to chase it higher. But the key thing is like we just got to respect our stops. I think that's where I tend to slap my hand the most is when I don't have like any area of like where I'm going to stop out, right? So that could be the area of stop out right there. And you have to live by your stop because if you don't live by your stop, then you're living by your emotions, and that could be a problem. Doris wants to go leverage NVDL. Yes, you could definitely go NVDL. I mean, there's a lot. There's like NVDX, but NVDL is a more aggressive one. Um, yeah, the 2x leverage right here. So yeah, this could be a play too. This one could quickly go to like, I mean, if NVIDIA really runs, this one could quickly go to 200. Let me see. There's a Meta 2. There's also a Meta 2x over here. So and it's crazy, right? Like once upon a time, we had 3x. That was fun. But then that was like when I kind of started, right? Like once upon a time we had 3x, but nowadays we just kind of have like 2x. So this could be a mega runner right here. Like this, something like this right here could run to like $70 fast, because these are the leverage stuff. But again, they're also dangerous because if you don't know what you're doing, I mean, you're playing with leverage here, right? It's like again, it's like meta on steroids, and then you could inject more steroids if you go in here. Oh, you can't do options on this one, but some of them you can. If you do options on a 2x, think about what you're doing. Anyways, yeah. So Meta looking great. Uber looking great. Nvidia we just talked about looking great. Now, yeah, I also think okay, let's bring back the investment committee of Silicon Valley over here. So, like folks are saying, well, there's NVIDIA and there's also AMD, right? And AMD, right? What should we do in this case, right? In a case where, well, the committee, some of the people in the committee, which is us here, are saying, well, AMD's not like LIF. It's not beaten down. LIF is beaten down, right? And the other people in the committee who track the technology or the intersection of AI, they're also saying, well, like it's also like AI right now, right? There's a lot of demand for like data center AI and hardware, and semiconductors are doing really well overall. So what do we do, folks? We got a choice between NVIDIA and AMD. What do we do as an investment committee? Anyone want to pop quiz, like, try to give their take? I'd love to hear how you guys go about it. But this is also a scenario that you'll also face out there, right? Like, do we just ignore it altogether? Like, if we know the markets are good, the sector is really good. Nvidia is looking really pretty good. AMD, not, it doesn't look bad. What do we do? Dor says AMD announced a chip that is equal to Blackwell, so I added to AMD. Okay, I'm also in agreement with Doris too. I chase with you right here, and hopefully your stop is at the 200-day moving average, right? If it fails the 200-day moving average, get out. But that's the entry right there. I like that entry actually. But like what like why I would argue. Okay, this is my opinion, and investing is very opinionated, as you can see with the Christmas colors of red and green, right? I also think this is a viable play on top of NVIDIA. So what's different with Uber and Lyft? Well, Lyft was beaten down and it was massive overhead supply, right? But the industry between Uber and Lyft, it is feeling the robo taxi from Tesla announcement. Okay, cool. But now we're in the AMD semiconductor segment. Semiconductors are way bigger, and it's a way bigger market. Well, can I say it's a way bigger market? It's a more important market that is responsible for the existence of robotaxi, right? All these chips that go into the robo-taxi vehicles. So this is a more critical component, and I think both AMD and NVIDIA actually look pretty good. So how do we go about it? You could play both, right? So now it's just a choice, right? You sort of got like both options right here. They both look good. They both look good, and it's really up to, I guess, what your preference is. Um, because I mean, semiconductors right now, it looks really good. We pull up this one right here. Uh, yeah, this thing is uh, SMCI is beaten down right now, but the semiconductor sector is recovering, which I really like. So SMCI could be a play, but the mantra is don't be cheap, right? So this one's a little too cheap, right? So the difference with this one, if you notice the difference with AMD, the difference is that this one is still in a channel. AMD wasn't, right? AMD was actually outside the channel. So AMD, the difference was AMD. AMD was actually like right here. That's a big difference, right? Because the assumption is that the channel keeps going down, right? So that the assumption here is that if it keeps channeling, right, some institution is quantitatively selling out over periods of months and months and months. But for AMD, it's above the 200-day moving average now. So that's one of the key price action differences. John says, I think there's a lot of expansion happening at AMD right now. A lot of my friends have gotten jobs there and they're still aggressively hiring. It seems they're expecting a lot of growth. Yeah, I mean, the whole semiconductor industry at large. So look, so it's a great thesis. Like, I think semiconductors are the way to go right now. And I'm waiting for software to make a comeback, but as I look at semiconductors left and right, I really like the segment. Now, you can play SMCI here, but just be aware that because of the nature of the setup here, right, which is still pretty good. I mean, you got a massive accumulator right here. This is great. Uh, it's just a different type of risk. That's all. We know the industry and the markets are good right now. So yes, this should be good, and you can participate here. But if it was me, I'd probably participate here, and then I'd probably sell by the 200-day moving average, right? And if it goes over the 200-day moving average, I get back in. I know it's weird, but because it's technically, if we remain objective, oh, it still is in a channel, and we need to respect the channel. That's what I'm doing. Dor says, John, Lisa Su, in my opinion, is a strong leader. Uh, is that the leader of AMD? I actually don't know, but sounds like it. Yeah, I mean, the whole segment is hot, guys. So let's actually pull up the segment. How about that? I don't think it's under computer hardware. I think that's just semi. Let me just. I'm actually a little curious. Let me see what else is in computer hardware. Okay, so Arista Network is categorized as computer hardware. That's on the network side, right? So we know. Look, I mean, like I said, the everything semiconductor and data center related are really strong right now. Like Dell could be really good right here. HP computing could be really good too. So yeah, I don't see why not. Why not? Like I see like left and right, like oh wow, like yeah, like all well not Western Digital over here. This one's a little weak. Some resistance right there, but they all look pretty good. If I pull up all this, even like quantum computing hardware over here, right? So this one, it seems like quantum's making sort of a comeback now, which is yeah, it's expected, right? But Arista Network hardware, that looks good, but it's not really semiconductor that I was focusing on. Dell, right, above the 200-day moving average and showing strength off the 200-day moving average. Excuse me. It won't always be perfect. Ooh, that coffee is making me burp. Sorry, excuse me, folks. Dora says SMCI. I embarrassingly became one of the bags, so I'm watching Soxo and we'll play the segment via Soxo. Okay, so let's go back to SMCI real quick and address Doris's bag holdership. I'm just kidding, Doris. But look at like okay, like take it from like an actual like you're holding a bag. How do you feel, right? Let me ask Doris. Like I'd be curious. Like let's say as a bag holder, whichever price you got it, what happens when it gets back to your price? Do you feel like you're gonna want to get out and sell it, or are you gonna keep holding? All right, that's something to know. Evan says, I think we might start seeing investment in nuclear soon. Yeah, I think there's very strong demand for renewable energy, especially with these data centers, right? That's like one of the let me see, renewable energy. There's an ETF out there. I know we're kind of going all over the place. Uh, there is a global, this one right here. So data centers right now, right? They consume a lot of energy, which essentially is like oil, but they want to do renewable energy. So it's nuclear categorized as renewable energy? I think it is, right? But correct me if I'm wrong. Maybe not. Because if it is nuclear, then we could look at uranium and see how that one's doing because that's the thesis, right? Dora says, well, I waited. Given the heat the AI chips generate, seemed like SMCI held the advantage in terms of being cooler. Um, let's just look at CCJ real quick. So what I would do, Evan, is like if you think we might start seeing investment, then it helps to go check some of like the components of like uranium or nuclear, so like uranium. So yes, like over the last 4 years, there has been solid accumulation of like uranium, but this is just a very wide price action that's kind of, it's gonna be tough for people. like very wide price action, right? Like up and down. Look at that, up and down, like 30. It's too wide. I mean, that some folks like that. You know, they would say it's a great trading environment. Again, it's up to how you want to make this game. Evan says AI data centers are going to hit power bottleneck. Yeah, yeah, I agree. I agree. In that case, like, would it make sense to look at oil? You know, we know that Chevron is betting big, right? We're like $70 billion buyback of their own shares. So there's definitely a floor here, right? It's just a matter of like where, where are they? Right here, they announced 75 billion buyback right there. We zoom out, they announced it, and basically, massive selling, right? That's okay because they're going to come in and hold the stock somewhere, and this thing's paying well, just a 1% dividend. So Chevron is really bullish on themselves. But you're right, like AI data centers are going to hit a power bottleneck. I think about that as well. And that I think Nvidia's thinking about that. And I think all these other hardware companies are thinking about that. So let's go back to AMD, right? I know we went around, but let's actually look at semiconductors because that's the actual segment that looks pretty interesting. And let's arrange it, right? I definitely think semiconductors are the play moving forward. Let's see. Let's see. Did I skip any questions here? Dora says, "Well, I waited." Okay, read that. Read that. Okay, just making sure I don't skip any questions. John says, "I think Microsoft has already bought a nuclear uh, power plant to power their AI." I wouldn't be surprised. Um, that's also really good to know too. And we could dissect that in the marketplace. But if we're talking about like active appreciation right now, I mean, look at Taiwan Semiconductors about to have no bag holders anymore, right? And and I know some of you folks in here might be like kicking yourself, but like, oh, it's too expensive, it's too high. Uh, it's high for a reason, right? It's high for a reason. But if you don't want to play it, then you want to be cheap, then go be cheap and find out. Be cheap and find out. But don't be cheap and then you'll find out. That's the other one. Uh, but yeah, like looking at this one right here, right? Isn't this amazing? Isn't this like just stunning? Like we're basically at all-time highs with Taiwan Semiconductors. Like every loser is a solidified loser at this point, and anyone that's holding shares is essentially a winner, except for like a few folks up here who bought it at 192 and beyond, right? 192 to 193. They're just off by a couple bucks, but essentially everyone is all losers are out. Everyone's a winner holding on right now. So at last time I checked, I think folks want to be a winner, right? So yeah, prices has a tendency to go higher there. Earnings coming up. Watch out on that one. But looking at the rest of it, right? We could, Broadcom even. Like, look at this one. Also about to go to all-time highs. Semiconductors are really, really shining right now, and it's a moment in the marketplace that it's not gonna last forever. Of course, there will be a correction period, but I'm only going to, from this point on in this investment club, I'm only going to objectively communicate as I see it, right? I think that's a better practice, and that's something that I've learned along the way. It's no longer about where I want the stock to go or where it was. I mean, yeah, where it was is important, but where it was or where it's at, like it's too high or where I want it to go, that doesn't matter anymore. What matters is that what is it attempting to do right now, and just focus on the right now, right? Because if you focus on the right now, the present, then you will see like capital being actively deployed into semiconductors right now. In which case, when I think about all other players, I don't think all other players have an idea of how high it could go. All they're thinking about is like, look, my peers, I'm competing against them, right? These other funds, like governments are printing money. I'm competing against everyone else. It has to go up, or they're making it go up. So I have no choice but to essentially participate, right? So and that's all they're going to think about. But what they do think about is risk management. So when prices starts to collapse, I think they're going to liquidate as well. So I think that's a better practice for me at least at this stage. Um, at least I feel like it works out well. Uh, any other comments here? Okay, no comments. Cool. So that's what it's looking like. I mean, all-time highs are a good sign right there. It's crazy, right? But it speaks about our society. Because if these institutions are forcing their hands to push prices higher and they're only going to these prices, think about it. Like it's just a like think about the semiconductor engineers who have shares, right? And that are local to Silicon Valley. It just basically their bags get pumped, their equity gets pumped, then their purchasing power enhances, and then they go out there and pump the real estate prices. So this is just like an ecosystem that just keeps on, going forward and going forward, right? That's what I'm saying. Like, prices wise, I will be increasing prices eventually. But for now, it's let's hold it here. Uh, Looking over here, Broadcom, AMD, Qualcomm over here, right? That's looking kind of interesting. What else? Qualcomm, Texas Instruments over here. Damn. ARM, yeah, ARM is definitely probably gonna be. These are coming up to be in play. Marvell, wow. NXPI, sure. Yeah, a lot of these, a lot of them are just kind of like building up right now. So MTSI, LSCC, CRUS, what else? RM, yeah. I mean, look, we're really at a moment now where like the judgment call, it is what it is, right? Because it's a really strong environment and everything's working out. The part that folks won't like is when the environment flips, and then that's when you really want to like change position. But the environment's good right now. It's really like musical chairs, right? When the music's playing, everyone's like, all right, let's start dancing. And then when it stops, well, you're gonna go back and sit down, right? You're not gonna be the guy dancing. Maybe you could. But Qualcomm right here, right? Again, I like to let it be auto trend line right there. So you guys see that? I didn't draw this trend line, but I rely on the computer. Is it me being lazy or me being smart by leveraging automated systems? Right? Essentially, that's leveraging of an automated system right there. Um, so yeah, like this is what it looks like. I definitely see lots of volume right here, lots of selling absorption volume right here. So right here, right, we definitely have right there. So around this price point, and it's objectively above this line. What I want to see next in terms of like prices progressing, right, in terms of like future forward-looking price action, right, we have to see it get above the 200-day moving average. And when it gets above the 200-day moving average, that could be the trigger to like the next trade, right? The next best trade. So Qualcomm building up right there, right? Fundamentally speaking, I do like the shares outstanding declining right here, right? That's some good action. Sales wise, last year is kind of slow right here. Looks like sales growth about 11%. EPS wise, their earnings did go down a bit. They do have some debt. Employees wise, they're about 50,000 strong. And let's see, multiple wise, valuation wise, about 5 times. 5 times price of sales, 22 times price of earnings. All right, I actually don't know what the average is in the semi space, but we could easily go in there and compute that. But yeah, just tracking some quick numbers right there on Qualcomm. Broadcom we looked at. TSM over here. Look at this one. Essentially like, it's at all-time highs. Wait, hold on. We looked at TSM already. I was thinking of Texas Instrument. There we go. Let's go to Texas Instrument. So that green line I put, right, was probably the prior high. Let me see. Let me zoom out. Yep, that was the prior high right there. So this thing is just building up and attempting to trade higher here. So this is something where you can see a big player, right? Earnings coming up, so be careful because it could go either way. But if you ask me, judging from the tailwinds of the marketplace in the segment, it seems like it wants to go higher. Dora says, John, yes, they did. Thank you for reminding me. What did? Oh, okay, about the nuclear. Okay, so it looks like someone confirmed the nuclear power plant stuff. I mean, at the end of the day, like I'd love to ask you guys, like, do you really need all the information to get in? Like, let's ask the investment committee here, right? Like, in my later years now, as I'm learning and teaching, I'm realizing like, do you really need to know everything to get in? Like, is it an absolute must to know everything? That was the what do you call it? That was the uh, ambition in the beginning. Bernard says later years, and you didn't mention Bernard. In our later years here in this investment club, do you guys start to realize like you don't necessarily need all the information, right? Because at the end of the day, even a kid could just make a quick decision of like, oh yeah, I like that stock, I'm just gonna buy it, and you can still make money that way. Like that it could potentially be profitable. So what I'm learning is that most institutions, yeah, they probably know this stuff. Probably like like to the same amount of like analysis that I do, probably like the angles. But like when I really think about it, you don't really need all the information. I think all you really need is just risk management. That's really all you need. Which is basically like, okay, where I get in, this is where I'm going to get out, and just respect getting out. And then from there, let's say if you risk 1%, then you have 100 tries. If you're always risking 1%, then you have 100 tries. And if you lose all 100 tries, then you got problems, right? Because that's basically saying that if you if you risk 1%, you have 100 tries in theory, and you lose all 100 tries, then there's a problem about where you're choosing to get in, and maybe you should try doing the opposite based off those quantitatives, right? That's a pretty bad assumption. But if you're getting in and you're getting it right and it goes green, but then you're giving it back, then the problem there I would probably say is you're not raising your stop, right? To protect your gains. So that's another one. Or you're getting in, right? And you're losing more than 1%. Then the problem there is that you're not doubling down on risk management. You see, like it's almost like if we follow the rules, it's almost predictable. So if you get in, you lose more than 1%, then you're sloppy on your tightness of risk management. If you get in, you're perfect on your risk management, but you lose on 100% tries, then you're very bad on your entry, and you might want to double check what type of stocks you're playing. Um, yeah, I was just thinking about that. Like maybe you could actually like pinpoint where the problem areas are, but that's how we get better, right? By acknowledging like our problem areas and work on getting it better. So yeah, I like Texas Instruments here, but earnings coming up, maybe after earnings, but after earnings it might gap up. That could be a scenario, but it is what it is. ARM, I mean, the semis are hot this week. I think this week would probably be, I mean, trying to slow down a bit, which is expected because it shot up so much. It needs to slow down a bit. Maybe it makes a comeback, or maybe it slows down for another week. But if we're talking about like actionable trades for next week, I'm leaning more towards like semiconductors and like select names, right? Select names would be like maybe like a Rubrik or like a Palantir or like a ServiceNow or like a Instacart. Or like a Robinhood. Those would be like some select plays for next week that are from other segments that I'm also looking at. Um, there's a lot. There's a lot going on out there right now. I mean, money is on the move, and so I want to want to be good at capturing it. Okay, so that's ARM. Let's look at ARM right here. So I mean, we kind of know ARM already, right? Let's look at the valuation and see what some of the numbers that we're working with right here. So ARM is 150 billion in market cap. We know that SoftBank owns the majority of the shares of the company. I forgot what percentage now. We know that they also don't have that much debt, it looks like. But it's definitely overvalued from what they're doing, so that's fine. I mean, overvalued is fine. It's talking about how precious the markets are willing to price this company. Will it go down in the future? Maybe, yeah. There could be a possibility that price goes down. I mean, I've seen Snowflake at 117 times price to sales, and then now Snowflake is at what? Let's go with Snowflake, right? The big, again, different market environments, right? Because you could look like a genius either way. Like you could look like a genius now, and you could look like a genius when it was at very highs. Look at the price of sales now. It collapsed 100x, right? I mean, at one point the price of sales was very high. Let me see if I can actually get that number. I actually would be very curious to know if I have it, that data point, because if it is, then that's like another powerful value point here for this investment club that no one else is offering. Before prices go up, that is. Okay. Let's see. Going over. Let me pull this up. Pull up one of the tools, and we'll go over to Snowflake. So let's put in Snow, and let's go into the financials, and let's go into interactive chart, and let's go into. It's actually pretty zippy today. It's pretty fast. Price to sales ratio, and at one point, right, price to sales is the green one. At one point, oh my. So I'm going to remove the price so that we have the historical right here. At one point, geez, look at that. At one point, the price to sales, the PS ratio, was 170 times. You know what that means, right? That means every $1 million that Evan closes at Snowflake on December 4th, 2020, every $1 million deal, he essentially created 120 million in equity value, right? So every $1 million deal was the equivalent of 120 million based off of that. Price to sales. Price to sales. Crazy, right? Crazy. Insanely crazy. So let's pull up ARM and do the same analysis. So we know that Snowflake was at 170. Man, that's wild. And I love this exercise. Like, this is truly what, this investment club is about for me, which is like diving into these insights that are historical and quantitative and critical, but yet people forget about it. And then mean revert back to reading like low quality fast food news headlines. But what I just gave you was like a 5-star tomahawk or grass-fed tomahawk steak, or we can use another meat for people who don't eat steak. 5-star vegan, okay? Like, yeah, like that was, again, people don't know quality of information. I just showed you at one point the markets, the so-called intelligent markets were willing to price something at 170 times. It reveals the hand of the institution, that even the institutions are not the smartest people on the planet. They will buy because of FOMO as well. And that's what 170 times price to sales is telling us, is revealing to us. That is powerful knowledge if one understood that. So ARM right here, right? It was actually cheaper before. It was at a price to sales of 20 times. Now is at 50, high of 53, but currently at around 45. Ivan says, good morning, Kay. Have you checked the McClelland oscillator? Not yet, but if you like, I could check it right now. Let's take a look at the McClelland oscillator. So also another value point that I share in here, right? Again, I pay $75 a month for this tool right here. And folks coming in here, they get to see, some of the value of the indicators. And when you see something like this, and you know where the McClelland oscillator is, you have an idea on where the markets are going. Yeah, we can look at Palantir valuation as well, right? And I encourage you guys to ask me these questions, because this is like it's like I have the buffet here because I'm paying for the buffet, and you guys just have to keep coming up and asking, hey, okay, I want another 5-star tomahawk or another 5-star vegan meal, right? Like the data point I have access to, I just need people to ask and query, right? Query from this very cool buffet database, right? So that's the McClelland oscillator. It's coming off a low. If you're asking about Palantir, let's pull up Palantir. I don't think I can do it this way, can I? Nope. That's what I thought. PLTR. Let's look at the price to sales multiplier of Palantir real quick. So go to interactive. I have over 30 years of data in here, right? That's really powerful. 30 years of fundamental data. So this is price. We're going to see the price to sales ratio. All right, so let's take a look at it. So it's actually at all-time highs. I mean, which makes sense. So in other words, right, this is a critical moment right here. This is powerful intelligence right here. The markets right now are willing to increase the price to sales of Palantir. What does that mean? So it's price of sales is a market metric, right? It is a market metric that shows the opinion of the markets. So in other words, the equivalent of this is like saying Cupertino home prices are now heading towards 4 to 5 million or 6 million, right? And why is that? Because something is happening out there, that there's like enough money or belief or consensus that this price has to go higher. It's saying something here, right? It's saying that the markets are actively pricing AI higher now. So this is powerful intelligence, right? If they're willing to pay they're willing to pay a higher multiple, right? It's like Snowflake going to previous high of 170. Now it eclipsed that and it goes to 180. Suddenly investors are willing to pay 180 times price of sales. Why is that? If you're willing to pay that much, why are you willing to pay up? Do you know something that I don't know? Right? And I mean, we will never have complete information, not all of us, but we know for a fact that multiples are multiples, right? The fact that, let's say if the neighborhood's $1 million homes and someone's willing to pay 1.5 and other people join in, it's saying something. It's saying valuations are trying to go up. Is it sustainable? I don't know, but it's that's what it's suggesting. PLTR is probably it is an AI play, without a doubt. It's an AI play. So let's go back to PLTR, right? I mean, you could almost see the components that are going up. I could see it because I'm lecturing every week, right? As I lecture every week, I could see the whole spectrum, right? From the commodities to the real estate to the semiconductor components for the data center, real estate data center, whatever, to top chips like Nvidia or AMD or whatever, to the intangible abstractions, right? The software side like Palantir. Um, so yeah, I mean, markets are pricing this one higher, and it's it's beautiful. Plus, Ivan says it's about to get to all-time highs. I would expect to pull back a bit after 45. Yeah, that could be the case too. Again, I've also learned to man, that's I I, I something I've learned is like I try to stop to expect now. Like it's like, oh, like, oh, okay, like for me, when in the past I was like, oh yeah, it's going, right? It's going and it's going to pull back and then I'm going to get in. But then now it's like why do I wait until it pulls back? Why don't I just wait for confirmation? So it's changed a lot now, I feel, where it's just like monkey see, monkey do. So if I see it, like, instead of saying I'm gonna wait until it pulls back to a certain price, like I'm gonna wait until it pulls back to 38 to buy, right? But why? I don't know, I was challenging myself. This is me challenging myself to introduce strategic stress for me to personally grow, right? I said, why wait until here when I can still play it up here, and if it goes higher, there's still potential, there's still meat there. And if it goes down there, let it so be, but it gets to a more attractive price, then let's play that too. So I started questioning myself that. So I don't know. Maybe, like, I realize it's like this game is really the journey of mastering oneself. And if you know that you're a very difficult person, then it's gonna take a while. What would you do a call for Palantir right now? I would. I Yeah, I would actually. I would. I would for like maybe like high risk like the next week or two. But it's gonna be kind of hard. It's gonna be hard. It's gonna be hard for a lot of people, and you want to have a tight stop on that too. And if I were to do now, like 1 to 2 weeks, I'd probably have to zoom into like the 15-minute or 30-minute, and gather like the 30-minute support and resistance, right? So 30-minute support and resistance, it looks something like that right there, right? So that's the I mean, this is essentially the range, but 30-minute support and resistance right there. I just had a thought of something. Anyways, yeah. So uh, that would be like that box would be like where I'd be focusing if I were to play like something very near term, right? Because it's like I know it's elevated on the daily, if that makes sense. I think I'm hungry. What should we eat today, guys? I'm getting pretty hungry over here. I'm thinking about food. That's what I'm thinking about. So Palantir. Now that Palantir is moving again, I always think about the stocks around a stock that's moving. So maybe there's like AI. So let's check out C3.ai. Let's see if that one's moving, or any like AI ETF, which I think I saw one, like this one right here. Well, this one's Asia. Never mind. Uh, AI big data. Let's see. Amplify ETF. We can look at some of these because I want to see what they're categorizing as AI. So let's look at AI real quick, and then we'll look at the AI ETF. What was I gonna say? So this is what do we see, folks? Pop quiz. What do we see? Right? When I force the engagement, I'm forcing you to use your brain, and that's a form of like using computation in your brain, I guess. That's actually, and if you try to engage and answer, you're actually doing yourself a favor, right? So don't think of it as like, oh no, he's stressful, it's putting me on the spot. No, like trust me, like we're engaging our brains here, and if you answer the pop quiz, you're more engaged. You're gonna get a lot more out of this moment than if you're not engaging, right? Than if you're like kind of like coasting co-pilot. What do we see here? Oh man, I keep on. Sorry, I'm cleaning my room, and so I got a mess everywhere. uh, yeah. So what do you call for Oh, I read that already. Sorry, I thought that was like a different comment. Anyone see anything? I see folks are shy. That's okay. That's okay if you're shy. Um, once upon a time, I was very shy. I would say maybe I still am, but these investment clubs have definitely helped. Uh, if you guys don't see anything, I will start showing you what I see. So it wants to break out to the upside. Yes, 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 yes. Very strong observation already, Doris. Very good job, right? So the auto trend line. Let the auto trend line determine. I love that, right? 4 points. We don't just have 2 points, we have 4 points. And the resistance is since March essentially right there. And what we do know about volume is that there's a chunk here, and then we know there's a chunk here, right? So it's going to hit some resistance around here, obviously. But getting above here is going to be really good, right? So I like this one. I definitely will like this one as it keeps going up, like above 30, right? If we talk about specific levels, like I mean, you got that resistance level right there, you got that resistance level right there. These are all areas where it could potentially halt a little bit, but that's something to anticipate, right? That could be a support level. Again, if I draw long enough, it's going to be pretty messy. And then we also see a lot of volume around this one right here, this price point, which is basically the $30. So $30, right? So now that we map our trade, right? We know $30. So scenario wise, it could do something like this, which is what I did, right? Some resistance right here, seems like, but we go to 30. That could be resistance, could go down, but once it clears 30, it could be support, and then it starts making its way up, right, into those forward-looking levels right there. Oh, hopefully that helps get a visual on how to think about forward-looking price action. Weekly calls for 29. Let me see. I mean, you kind of crazy, but I wouldn't go for that. No, I wouldn't go for that. Was it 27 and then a 1 week call from, let's say, Monday to Friday? So this Friday expiration 29. No, I wouldn't do that. That's too. I mean, there's a possibility on a gamble, yeah, sure, but I wouldn't go throw money away like that. That seems like, I feel like it leans more towards like probability on the uh money thrown away side. I wouldn't do that one. I don't think there's opportunity there. I'd rather do, let me see, let me zoom out. I'd rather do like, yeah, so like look at the overhead supply, right? If you ask me, like I mean, yeah, if you're high risk towards 29, sure, but like there won't be that much premium, I feel. Um, I'm thinking. I don't know. I probably go longer data on this one. This one's not yet. This one's too scary. I mean, maybe like a $30 call in like the next 3 months, right? Like at the money 3 months out. That's probably a hit, but it won't be much. Uh, it won't be much until like you really get confirmation that money's really deploying, right? But a lot of the times, like how do you confirm money's being deployed? Like, what if money's being deployed in your face right now and you don't realize it? There's actually techniques to detect that. Some of the pros actually leverage these techniques to detect when an institution's coming in right now, because a lot of times it's after the fact, right? For example, like we look at Uber, right? The institution came in, but how would you know the institution came in that day? So this was the last trading day right here. You got a fat candle right there. Obviously, that's an institution, but how do you know, like during that day? There are techniques to it, right? Like, analyzing like the pre-market. So the pre-market would have gave you some indication right here, and then the opening as well, right? The opening, and then the first hour or two, and then the midday lull, and then the final day's close. There's actually, you know, you could run, day trade mathematics to figure out like, oh, like an institution is accumulating on this day, right? Like, but how do you know, right? Like we're looking at it like a week late, well, a couple days later after the fact, right? And then now you get in and you're just like less margin, but that is what it is. So there are techniques to it. Ivan says Minervini posted a chart that after the presidential cycle, the stock market goes up the first year. That's interesting. That's an interesting data point. Again, I respect his work, so yeah, I take that into consideration. But I would also line it up with what I'm seeing right now. So a lot of the things that I'm trying to do is like, yeah, I hear these pros out there, but like I also want to make sure that I'm actively exerting my discretion, if that makes sense, Ivan. Like I want to make sure that I'm making a call every week, and because the objective, the goal is not to let someone else make the call or wait for someone else to make the call. The goal is for you to do the critical thinking, analytical work, saying, "Hey, I really looked at all these points, like A, B, C, D, E, F, G, whatever points, and it's suggesting that it's going to go this point. So I'm going to be a leader. I'm going to make the call, and then I'm going to double check with like what the other guys are saying. So I think that's a more helpful practice, but it's hard, right? Because I think the vast majority of people out there on the internet, as I noticed, it's like everybody's looking for just signals, but people don't want to learn like how does a signal develop in the the reverse engineering of a signal and understanding like how the signal comes about essentially, right? Like I mean, this is the day. So whenever I see a big candle like this, I think it's extremely helpful to zoom in to like the 5 minute or 3 minute or whatever and see what was that, what was the intraday price action that day. What did it look like? Because obviously the institution came in last Friday for Uber, but what did it look like? It started off with a huge gap up in price, probably because the market maker had a bid that came in from the institution. It's like, whoa, that's a big size you're trying to buy. All right, I'm going to have to actually price you up from instead of 78, which is what we closed at last night in the aftermarkets, I'm going to have to price you up at 82. So come in at 82. And then 82, right, at the pre-market, this is like what, like 3 a.m. or whatever, 4 a.m., it kept on hitting 82, 82, 82, 82, 82, 82, 83, 83, right? 82, 82, right? Around here is like kind of chop, 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 but 82, 82, 82, 82. Right when it opened, right? What happened when it opened? These are 5 minute candles, by the way, so every candle is 5 minutes. Right at the open, 82 held, 82, 82, 82, spiked up a bit, right? Try to move higher, and then went up above 82, 83, 83, 84, 84, 84, 84, 84 held. 84, and then that's the first hour right there. Right by 11 is already like an hour to 30 minutes, 90 minutes done, and it resumes. 84, 84, 84, 85, 85, 85, 85, 85, 85 to 86, 86, and then from there, right, the day. I mean, this thing from the day, it was already up 10%, right, for the day by the first 2 hours and 30 minutes, right? 86, that's like 10%. 86, 86, and then sell. 86, 86 down to 85, 85, 85, 84.75. Found a bottom right there around the 75, right? Right around the 75, 75. Came back in, right? 85, 85, 85. Held the lull today. 85, 85, 85, 85, right? And then 86, 86, 86. By 3 p.m., 86 again, and basically closed at the high for the last hour. Last hour, some selling came in, 86 to 80, just basically around 86, 87, right? Some selling, but basically closed at a high, closed strong after hours, right? Selling down a little bit, but still hold generally 86, 86, 86. So yeah, so that like think about the institution, right? They're coming in. I want you guys to think more about the institution, and not like your boy, your homie, what your homie is doing. All right, like that, like your homie is just probably like opening up their Robinhood, making a trade, and then going to work. Don't think about that. Think about the institution, right? They're coming in like it's a different day for them. When you get that perspective, then now you start thinking like, okay, where are these guys coming in from like a really, price strategic point or price action point? So that's an example of Uber trading in one day from 82 to 86, right? From the pre-market to the first hour, hour and a half, 90 minutes, whatever, lull of the day, and then last hour, closing. And it closed strong with mostly green volume right here. That's just one day. Um, so yeah, there is some interest in Uber, and this is going to all-time highs. So I'm expect this one to go higher. How high? I don't know. That's up to that's the what's the opposite of a bag holder? It's the money bags, right? Opposite of bag holder is money bags, and so now you're moving into a money bag roller coaster, which is another like psychology to manage. I realize. So there's the psychology of like no bag holder where you're not in position. You're like, oh, I missed that trade. Oh, I missed that trade. It's always painful. And then there's the bag holder where you get into a position and it goes against you. And you're like, oh, it's against me. It hurts. And then there's the the money bag holder where you get in and you're green and you're like, oh, I feel so good. It's like it's green light. It's just money bags. But then it goes a little bit and you're like, oh, I felt that in my heart. Right? That happens too. So I think you literally have to train for that. There's no way around it. Like yeah, sure, like you can make $1 million. Right? You can make $1 million and then lose a lot of it, right? You can lose a lot of it. It's because speaking from experience, right? You can lose a lot of it. It's because when you're up a lot, you don't realize your discipline. It's our discipline in this game has parameters, right? So in other words, like there are certain things that you only learn when your parameters are tested. So you gotta stress test your discipline. So you think your discipline's like this, right? But like there's like discipline at this level and this parameter. So there's, your discipline is like it's about honing in on your discipline and making it really firm, even when you're up a lot. And so I that's something that I revisit to this day. I think about like some of the stupidest things that I did when I had the fattest money bag, and like what I could have done better, right? So I personally think everyone will, if you stay around long enough, you'll hit a big one eventually, but then like you'll learn about yourself from there, and then you'll also give back quite a bit. At least I did, and it happens to like some of the if you read the stories of like the other traders in the industry, like some of them like made it to like the greatest, like a lot of money, and then they lost it all, and then they came back. That's crazy, right? So yeah, and I really think it's like emotion and not focusing on risk management and not engaging in the boring stuff, right? The boring stuff is the day to day, like the week after week practice and the discipline to be there. That's like the day to day, week to week stuff. And it doesn't matter who you are. I don't care who you are because I mean unless you're like one of the Tesla robots, like unless you're a robot, sure, but I think it just applies to everyone. Like, even if someone made 0 to 10 million, you still have the opportunity to lose it all because at that point you're going to be, you're going to be levering up. You're like, oh, I got 10 million. I'm going to I'm going to throw some here. I'm going to throw some there, and it's just, yeah, you could easily fluctuate back down. I'm a big believer of that. Um, Like no amount of capital is safe, and no amount of capital is going to get easier. Maybe you'll have better psychology at certain levels, but it's always going to be hard protecting your capital. Uh, Ivan says, "Kay, I connected late. Are we discussing stocks later? I see uh, a few to see dash. Yeah, we are discussing stocks. I kind of am. I thought I was, but all right. Yeah, let's keep going. Sometimes I could go off, and you guys gotta help me recalibrate, right? So let's look at Dash. I'm also looking at Upstart and Affirm, right? Those again, I think about the stocks around it, right? Dash is good. I mean, this one is moving higher. Earnings coming up, so I would try to cash out before earnings. But this one is probably moving into not all-time highs, but recent highs. So recent highs. So yeah, I would definitely cash out on earnings. Just a rule. I mean, it could go up, sure, but it's just a rule. It's just a rule that there is overhead supply, and I rather cash out on earnings, unless there's like true confirmation. Let's look at Airbnb real quick, because when I think about DoorDash, Uber, it's the marketplace software, right? So seeing if like there's a trend here, but nope. Airbnb just recovering from its sell off right here. But Upstart and Affirm I do like. It's also on my radar for this week. Sorry, I'm trying to there we go. Excuse me. The coffee. The coffee was kicking in. Yeah. So Affirm's been moving, and then now Upstart's moving. So I do like Upstart. This was the one where Minervini embarrassed himself on CNBC, was it? I forget. Where the person asked him like, since you're very known in the industry, what does Upstart do? And he was like, he's like, I don't know. I just trade the charts. It's what he should have said, but I think he said I got technical difficulties, and then he powered off. I remember that. Yeah, Doris, COHR as well, and CORZ. Those are on my list. VRT, VST. Let's take a look. But Upstart, I like. I mean, basically, this one is just moving higher, recent highs, right? Affirm is really the one that went first, and again, they're both in like last mile credit lending, basically AI ML credit, as far as I know, machine learning credit opportunities. So this one had a big spike, right? Big institution came in. So big candle came in. Let's analyze the 5 minute right here, right? You probably see something like earnings wise, it gapped up, right? So this was the big day, Friday, right here for Affirm. So what happened? This is the 5 minute every candle. So right at the open, the bid came in to the market maker, I'm guessing. It was at 42, and then it's like, oh, that's so much supply. I got to price you at like four. Let's do 43.5, right? So 43, 43, 43, 43, 43. Right at the open, clears 43, goes up to like 44.5, sells off back to 43. So 43, 43, 43.5, 44, 44, 44. Clears up, goes higher, 45, 45, and then really starts sailing, maintains price all the way through all day long accumulation. 44, 45, 46, 47, 48. Tops out at 48, last hour selling, right, to 46.9. Phenomenal day, 12%. That's a firm right there. So big institution coming in, accumulating on a Friday. On a Friday, think about that. Who dumps big money on a Friday? On a Friday. It's not a Monday. It's a Friday. That's was that Doris? That Doris was probably like like focusing on maybe retirement. I don't know, or like enjoying her time, right? Like taking it easy. She's not gonna go. Oh, I gotta go in on a Friday. I'm feeling hot on a Friday on October 11th, and I'm feeling like I gotta buy 20 million shares on a Friday. Come on, I don't think that was maybe that was Doris. Maybe we never know, right? You just never know. uh, uh, Bernard says, I get the McDonald's free fries on Fridays. Yeah, exactly, right? So someone was really working on a Friday and really wanted to come in on this one on Friday. So that's what I'm saying. Like you have to pay your dues in this market, which is basically what I've been doing like all these years in this investment club, and I'll continue to pay my dues because the more scenarios that you see, the more you understand how the players get in and out, and that's just the knowledge right there. And you could back test, but you know what that means? If you back test, that basically means that you're going to sit by yourself on the screen for hours and hours and studying the historicals, right? This is sort of like present, analysis and then forward-looking analysis. But in the end, to see, the 8.2 billion people in the world, you have to look at the screen. So you have to do this analytical work. There's no way around it. It's a grind. It's a grind just as much as you go to the gym. So that's why I want to make sure that I'm doing it at least once a week. Dora says I get out of risky bets on close on Friday. Did it on FAS, but still in. She says. So Doris likes to get out on Fridays, right? But somehow this, some institution out there in the world decided to accumulate about 20 million shares of this. So let's think about it for a second. On Fridays, I think most retail traders or most individual investors, most retired people, I'm pretty sure they're just like, it's Friday. I'm gonna go take my time. But someone here on a Friday, right? I'm pretty sure the majority of this was like that same player and really hardworking traders who were like at the screen on a Friday, who are like, yep, this thing is under accumulation, has been under accumulation all day. I'm just gonna jump in and bam, 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 bam. Sometimes I also think about this, which is like if I'm a big institution, right, and I know I'm going to be accumulating something all day, like I'm pretty sure it makes sense for me to buy up the options before I start accumulating because I know I'm going to be popping the options up. That's something I think about. And I'm very curious as to if people do that because if they do, that is a savage way to make money. You know what I mean? Like if you knew you have the money to buy 20 million shares of this and push the price from 43 to 47 and you knew that with confidence, like you would the days before you would be like buying up the options, right? So this is why it helps to analyze the options flow and stuff like that. You'd be buying up the options, and then by Friday, like all week, you'd be buying up the options, and then by Friday, you initiate the shares buying, and that is like it just almost sounds like that's like a savage way to make a lot of money. But the only way to do that is to be a whale, right? Which now you have your pros and cons too, because if other people detect you as a whale getting in, then yeah, like that, those little fishies got to eat around you, right? Because you're the whale. Um, Dora says, K, the VIX is 20-ish, so I lower my risk as stuff happens over the weekend. Yeah, yeah, that's the one thing where it's like I see a green light and indicators are pointing at a green light, which is objective, and that's what I see, monkey do. But it is over 20, and so that's something that we just have to, it's just you just got to disclose that and say, hey, it's over 20. So this is what we expect, or this is what we see the market's doing. But because VIX is over 20, then this is the situation right here. So yeah, yep. So that's a firm right there. We didn't look at the other ones that Doris wanted to look at, which was VRT, VST. Let's look at VRT, VST, or VST first. Vistra Corp. Oh, you're looking at this one, huh? Wait, was it this one? No. I was thinking about a different one. Or was it this one? Let me see. Um, I mean, so it's utilities, Doris. So I mean, let me see what's attractive on these dividend wise. Yeah, I mean, I I'm okay. Well, this is actually pretty fast for a utility company. Usually, utilities are very slow, but this one's moving very fast. Do I like it? It's okay. It's okay for now, but we found some support on the 20 MA, maybe, but it shot up a lot. It's selling off right now, so it's just it's like a near-term pullback. So, but it looks like it wants to go higher, right? But it's under near-term pullback right now. The other one, VRT, if we take a look at this one right here, let's see, let's see. Now this one looks better, right? This one looks like it's all-time highs. Yep, all-time highs. So this one looks good, Doris. I mean, I like this one. I like this one. Uh, One because it's all-time highs, so everyone's a winner. Earnings coming up, so watch out for that one. In terms of like, let's look at the underlying, like what's making this go all-time highs, right? Is it a combination of just speculative price action, or is there actually some meat on the fundamentals here? 42 billion market cap. Sales wise, 7 billion. They take home about 500 million. It's like almost like that's the number that they set expenses to. Uh, Dor says this is an independent utility company that is strong in the A. Oh, okay, I see. So that's probably why the chart didn't look like it moved like a utility company. What else? VRT is about energy going to AI, like VST. Is that VRT right here? Yeah, I haven't looked into this one. But okay, it seems like, you know, it's not trading at a high multiplier. There is earnings, EPS wise, right? They're taking home 500 million. Sales wise, they're going about 12%. Margin wise, they do take home money, right? It's a 33%, 34% margin business. I mean, nothing too bad. I mean, they do have some debt, but maybe it's a feature about the industry that they're in. But it is under accumulation here, or movement, which I like. It's a very strong stock, actually. Like just zooming out, this is like a very strong one. I like to actually look into, maybe the website and see a little bit more and get a better understanding of like the product and stuff. But yeah, I mean, this one looks pretty interesting. Technology infra. So it's like, okay, it's like data center related stuff. Yeah, okay, data center stuff. Yep, everything data center AI stuff is hot right now. You know what's funny? Like just having like AI on your website probably just like it just makes investors go, ah, that's where I gotta be. And sometimes I feel like money's just deployed that way. Like if you make your website look hot enough with all the right buzzwords, like you'll catch a bid, which is kind of funny. But you gotta be careful of that too, especially in venture capital. But yeah, this one, I mean, it looks interesting, but I wouldn't marry this trade because let me see. Oh, they are doing actually a lot. 6.86 billion in sales. That's actually a lot. So okay, no, it's not bad, not bad. This is what market is it in? I forgot where is it located. Oh, it's not showing the index. Let me zoom out. Let me zoom out one more time. Yeah, it's a long dated company. It looks like it SPAC IPO. Wow, so this was a SPAC. And you also want to analyze like it ran up a lot last year, and now it's running up a lot this year. So the hype is it's nearing a potential collapse. But for now, if you ask me in the near term, I think it's going higher. But in the next 365, let's say next year, 2025, it might perform really bad. That's just how it is. Like what I noticed is like a stock will run for like 2 years, and that's like usually the max, and then it'll have a deep correction. Let me just double check that with Nvidia. Like it was just have like an outstanding 2 years about or 1.5, and then the following year it just collapsed. I mean, Bitcoin did that. So again, I've learned because I've been in scenarios like that. So here's an example right here, right? So I noticed that stocks will run for 2 years. So this is 1 year, this is 2 year. By year three, you have a big gigantic sell-off. So for VRT doors, I think it's on the second year of running, right? Even like right here. Look, oh my gosh, look at this one. So this is one. Look at this. So look at this one right here. Look at that. It runs for about two. This one was three actually. Three, but then it became sluggish on the third year, right? I mean, give or take some of these months right here, but you see that about 2 years, and then boom, it goes in a corrective period. So I'm not saying that's VRT is bad doors. I'm just saying that it's been running for 2 years, and typically what I see in the marketplace is it'll run for 2 years and then deep correction, which kind of like talks about, well, if that's true, Kay, how many years has Nvidia been running? It's on its second year of running, so it still has until the end of the year, right? Next year, I don't know. Maybe it could run for another year. Who knows? Hood's been running. Yeah, Robinhood is also on the list as well. I think crypto is going to make a comeback as well. I don't know. I mean, overall, it just seems like I'm pretty excited for the coming weeks here. I see a lot of healthy participation. It seems like maybe institutions are coming back from vacation and they're like, "Hey, look, guys, we got to perform. We got like, a couple months left in the year here." So, yeah, yeah, Robinhood. I don't think Robinhood's at all-time highs, but it's coming off of like a nice rounded bottom right here. Lots of accumulation right here, or lots of, this is a liquidity pool right here. So $10 is probably its lowest limit right there, and I don't expect it to go back to $10 easily at all. I expect the lowest it'll go is like $20 for now. For now, right? If my again, the whole point of this investment club, and if you learn all these years with me, it's about being flexible, about being wrong too. So what I think is like this is what I think, but I'm also just know that I'm always ready to anticipate being wrong, because that's just what it is. Rubric. So I'm making new highs. So this one is fascinating, right? Hold on, is it officially new highs? Yeah, yeah, it touched a new high. So this might be in play now, right? I know it's ran up a lot. It's tough. It's always going to be tough. But this thing is basically the IPO price. Oh, darn it. I can't see it. The IPO price. Yeah, that looks like that made it worse. The IPO price. There we go. The IPO. Yeah, I don't know if you guys saw what I did there. I slapped it between the SMA and the 50 right here. So the all-time highs. It's basically like right there. 40 bucks, right? 40 bucks. 40 bucks. Let's zoom into the 5 minutes. See what happened at $40. Did anything happen at $40? So zooming in, this is 5 minutes. $40 was right here. So $40 is that major line in the sand right there, I think. Right? It's sold down from the $40. So come Monday, gotta get back up above $40, and for it to be progressive. If not, then we go back down. If it doesn't go up to above 40, we go back down to here, and we figure out from here. That could be a scenario, right? Again, that's based off of my price action instincts of what could potentially happen. Let me see. Okay, cool. We got about 10 minutes left, folks. Any other stocks you guys want me to look at? But always a great session analyzing stocks with you guys. Tesla, I think it's worthwhile taking a look at. Um, just because like they had their announcement, right, that we've been talking about. I've been saying that one of the sessions that we did in the last, I think, 3 to 6 months, I said that robots are going to be like you just saw it. It was just the trajectory of like what's going to happen, right? You got to introduce a new personal product, computing product, to the consumers so that the consumers consume a lot more computing stuff, because the goal is to get everyone online, it seems like, from a global initiative, or to make AI one with like human beings. So Elon Musk, as I'm pretty sure that was like the news of the week, you guys saw all those robots and stuff, and look at what the stock did, right? um, it's almost like it definitely played to like buy the rumor, sell the news, but this setup right here is kind of nasty. But earnings coming up, I think maybe this is a bias. I'm revealing my bias here, right? But I think this one probably gaps up on earnings, so I am watching this. Uh, like I think there are plays that one could do around earnings. Maybe there's a earnings play. But I think this one's probably due for a gap up, considering that the rest of the markets are going up. I think probabilities lean towards a big gap up on Tesla for earnings. So that might be a, a timing of like strategizing a good play, because that lots of money could be made if you're willing to throw away like $5,000. Let's say you bet $5,000 and you're right. Uh, it could just make your lifetime. But if you're wrong, you lose $5,000, right? So think about the risk reward right there, right? Like if I'm right, or even $10,000. If I'm wrong, I lose $10,000. Okay, I could go earn that back. But if I'm right, it could be a multi-million dollar position. Hmm. That's a game we play in the stock market. But yeah, that could be a scenario. So I hope this thing goes down more, right? Make the options cheaper, and then I probably do some Vegas style betting on earnings, but we'll see. John says, would we be able to look at WM? Yeah, absolutely. We can look at everything, anything you guys want. I mean, you guys know what data stuff I have. The only thing is like I encourage the query, right? Bring in the queries, and good things happen. So okay, waste management. So I mean, I see like liquidity pool accumulation with the volume right here, so big right here, right? So obviously, I definitely think there's something here, right? Some player definitely buying there. Let's zoom out. Let's get a little bit more perspective, right? Now zooming out, yeah, you could see that player. The player's been accumulating the 200 area for 200, 210 area for some time. So yeah, I mean, zooming out to the monthly, man, it looks like a dinosaur right here, right? So yeah, I definitely see it. But what do I think of it? Yes, it's obvious that some gigantic player, gigantic, definitely gigantic, because 20 billion, 400 million shares outstanding. Um, uh, if we measure the period, right? I guess from here to here, right? Volume-wise, this period, 278 million shares. So that was like half of its float shares outstanding right there, right? Or more than that, 278 million shares traded here. So a lot, I mean, half of its like shares out, more than half of its shares outstanding traded at this price right here, exchange hands. So it's telling me that someone's really interested here. Um, would it be reflective in the underlying? Let's see. The ownership, I'm actually curious to know. So we go in here, we go ownership real quick, and I want to see if there's a big majority holder, because there's 400 million shares. Vanguard has, oh, why don't they have commas here? 36 million shares. Bill Gates, oh, Bill Gates is in this. And total asset, wait, percentage of total asset management? This is a big position for Bill Gates. And whatever Bill Gates touches is like you got to be in it, right? uh, that's interesting. Hold on. Let me see his portfolio real quick. Um, he owns. Am I reading this right? Shares outstanding. He owns. Yeah, he owns like about 9% of this company. This is actually, there's some good not insider information, but There's good information here um, for a big conviction bet. Okay, current portfolio $47 billion. We go in here. My button's not loading, or did I already click it? I'll click on that one. Oh, I gotta refresh it. All right, it's not loading. That's why I started looking into it because of Bill Gates. I love these questions. That's why you guys got to ask all the questions. So let's look at his portfolio real quick. There we go. So this is his. So besides Microsoft and Berkshire Hathaway, which is like an ETF and Microsoft, what he's known for, his biggest position after that is this company right here. So it looks like, again, I can only, this is where I'm speculating intelligently, right? Is that I see a lot of volume here and I see his ownership. And my question is, when did he own it? Year to date, so he's up. Shares, waiting, trade impact, 3 month. It doesn't show when, right? But he's definitely a holder of it, and that's interesting. So he could have been a recent buyer as well, but I like it. I mean, I like what I see. So I'm bullish on this one, and I think this one could be priced to easily $300. Yeah, I think this one could easily be $300. And now you're asking how long? Over a year, over a year's time. But it's high for me personally, not an investment advice. It's high confidence that it'll get there to 300. Like I have high confidence on it. And again, I could still be wrong. And risk management would be the 200-day moving average right here. So that's why I like now I want to look at the company itself. Oh wow, what a great domain, wm.com. It's like two-letter domain. That's imagine if I could own, k.com or enterprise.com, my arch nemesis. Just kidding. Okay, yeah, I mean it's pretty straightforward. We look at this and we kind of know already, right? It's the side of us humans that we have no choice but to acknowledge, which is taking out the trash. This actually looks really good. Dora says Bill Gates' portfolio and found that one of his favorites is waste management. Yeah, yeah. This is one of his favorites right here. We could check the company fundamentally. I know Baras says CrowdStrike and WCloud. For those two, I'm looking away at software right now. Most of the actions, and I focus on where the action's at. There's a little bit of action on CrowdStrike and some action in software, but most of the action is in semiconductors. So I'm focusing more on those right now, and that's what am trying to train myself on. Not to have a bias. I do have a bias towards software, but to be aware of that bias and focus on the bias of the market, not the bias of myself. So myself, my bias is software, but the bias of the markets right now is hardware or semiconductors. So I try to focus on that bias. What was I saying again? What was I looking at? I forgot what I was gonna say. I was gonna look at something. Found one of the favorites. What was I gonna look at? Oh yeah, I was gonna look at the fundamentals. So price to sales wise is cheap. PE, I mean, yeah, but I'm looking at price to sales. It's cheap for this segment. Is it a leader of this segment? I might want to look at. I think it probably, if it is a leader, then that explains a lot. It sounds like it is a leader. Yeah, it is a leader. So it's not just any waste management company, it's the USA Waste Management Company, right? And so, wow, I swear he's got a really good like investor managing his portfolio because there aren't that many, and he's like, it's like he's cornering a segment here, right? You could kind of see it. Like there's only 19 symbols here that are publicly traded, and really in the billions, there's only 7 companies, and here like of the 7, he owns the best one. Talk about playing Monopoly with a Monopoly player over here, right? Um, so I like it. I actually like it a lot. Mm, yeah, this could be like a 200. Like he's betting inflation, right? And it's just like it's almost like it's savage because it's like a front run on inflation where we know prices are going up from what I'm seeing, and let's say Evan, for example, and all of us, we have no choice but to take out our trash, right? And so he's going to own, 8%, 9% of a company that takes out all of our trashes, essentially. And and that's something that, I mean, if you choose not to pay, your trash, are you going to take out your trash yourself? Are you going to become the trash man or trash person? Uh, that could be a scenario, right? So it seems like, yeah, this is something. Damn, that's wild. Because I think of like beyond just stock price, right? Like, yeah, there's like the benefit of stock prices going up, but now I also think about like what's the motive here and what's the potential outcome. And he's essentially, when you're investing in this segment, you're essentially hedging away expectation of a cost increasing in a segment. That's what you're doing as an investor. You're trying to capitalize on value that's accruing in a certain segment. So is the expectation here that you're bullish on people paying up for trash taking out your trash? What a way to end the session today, huh? That the cost of taking our trash is also going up, and a reminder that we all have to be working. If not, inflation will be in every aspect of your life, down to where you decide to throw away your Starbucks cup. So yeah, I like that one a lot, John. It looks really good, actually. Now that I developed a picture of it, and it's like high confidence, and it's like an inflation play as well. Um, so yeah, it looks really good. Anyways, guys, hope you guys enjoy the session. I'm getting pretty hungry now, and I got a lot of cleaning to do today. I got some objectives to hit, but I'll close it with this. And why performance is important. IBM is a 100-year-old company. I think that was recently, right? It recently became a 100-year-old company. Correct me if I'm wrong. And IBM being a 100-year-old company and the stock's performing, 100-year-old company, and its sales is doing about 20 billion. Oh, I'm sorry, 60 billion. 60 billion in sales. 60 billion in sales and became a 100-year-old company. While on the flip side, its competitor, AWS, is since 2008, was it? Like less than 20 years, but at 100 billion in sales. So what's the difference there of a century? The lesson of I'm closing it with a lesson of a century. A 100-year-old company took 100 years to get 60 billion, while a less than 20-year-old company took less than 20 years to get to 100 billion in sales. The difference, my friends, performance. Chase performance, right? So, anyways, that's something to think about. Gotta go to the gym and chase performance. All right, guys, I'm gonna power off now. I'm actually pretty hungry, so I will catch you all next time. Thanks so much for tuning in.